you own a home in Florida, you should pay attention to this video. This pretty common mistake made on a lot of insurance claims could end up costing you tens of thousands of dollars. We're on our way right now to look at a water damage claim where the insurance carrier applied a $10,000 water damage cap, and I don't think that it was applied correctly in this claim.
This happens more often than people realize. Sometimes it's not about whether damage exists, it's about whether the policy was interpreted correctly. So let's take a look at what we're dealing with here. After reviewing the policy, we found the carrier applied a $10,000 limitation that wasn't triggered by the facts of this loss. This means the claim should be evaluated under the standard coverage, not the reduced limit. Once the correct coverage was applied, the full extent of the damage could be considered. Instead of a $10,000 payment, this homeowner's claim was valued at approximately $62,000 after the policy was interpreted correctly. This saved him from having to pay for his own drywall, his own cabinets, and made sure the insurance company did what was right.
Folks, did you know home insurance here in Florida is way higher than US average? I'm not an insurance agent, but here's what the Florida Office of Insurance Regulation reports. Florida homeowners pay about $3,000 more per year on average than the national average. And according to Insurance Journal, premiums have climbed over 30% since 2022. Why so high? Older roofs often mean much higher premiums. Coastal homes face more risk, so there are fewer insurance options. So, big tip from me, always get an insurance quote before you fall in love with a house. See you.
So I just looked up the average home insurance cost per year for Pinellas County, Florida, and it was only $3,000. Y'all, I've lived in 9 different states, and most of the states charged way more than that. What are you paying? Are you near a beautiful beach like we are in Pinellas County? And are you paying $3,000 around that? Just curious.
Hey, it's Joe from Georgia. If you want to know how bad the housing market is, there's 15 million empty homes in America on the market. Now, this has been put out by Lending Tree, and they should know they're a huge mortgage lender. But 15 million homes are empty. And guess what state has the most empty homes? That would be none other than the state of Florida with 1.5 million. 10% of those homes across the United States that are empty are in Florida. And if you live in the Cape Coral, Fort Myers area, good luck on selling a home because almost 40% of the homes there are empty. Now, this is a report coming out from Lending Tree. Sales are not happening across the country the way they were just a few years ago, and it's got something to do with the high interest rates and people overpricing their homes. But if you live in Florida, you've got 1.5 million empty homes for sale, and if you're putting your home on the market, you're going up against those houses. So the housing market is not improving at all. Cash buyers have a great day every day when they're buying homes, but if you're trying to finance a home here in America, go to Florida. The prices should be diving with 1.5 million.
Buying a condo in 2026. Stop and listen to this. My name is Dina Elfrod, and I want to update you all about the changes that are going on with condos. As of August 1st, condos are now required to have 10% reserves. What is the point in having reserves? The reserves are there to help with major repairs, roofing, plumbing, etc. And now condos are required to have 10% their funds going towards reserves just in case an emergency like Surfside. So it is very important if you are planning on buying a condo this year, financing with Fannie Mae or Freddie Mac, it's very important that you know this because they will no longer fund it if the reserves are not at 10%. How can we tell whether the reserves are at 10%? Your agent would need to get that condo's budget, master insurance, and the minutes, give that to the lender. The lender would then review those documents to see if they're able to fund that particular building, that unit, etc. There are other ways or other options. Of course, I am not a lender. I can connect you with a lender to help you, but getting with the lender and knowing where you are and where you stand is going to allow you to know whether you're able to purchase this condo or not. Before you go under contract, it is very important that you get that information to your lender so you can know if you're able to move forward. Always, I am a South Florida realtor. I'm happy to help, and make sure to follow for more.
Before you buy a condo in Florida, watch this, because a $300,000 condo can turn into a financial nightmare fast. Since the Surfside collapse in 2021, Florida passed new laws requiring all condo buildings to fund full structural reserves. Sounds reasonable, right? But here's what it actually means. Special assessments of $10,000 to $100,000 per unit are now showing up in older buildings. Some of these units are only worth $150,000 to $300,000, meaning the assessment can literally approach the value of the home. Right here in Hillsborough County, condo prices dropped over 5% in the last year. HOA fees in some Tampa Bay buildings went from $650 a month to $1,400 a month in 2 years. Not because anything got nicer, because the reserves, insurance, and assessments all hit at once. So before you make an offer on any Florida condo, here are 3 things you need to request. 1. If the building is 3 stories or taller and 30 years old or older, ask for both the milestone inspection report and the structural integrity reserve study. Those are the 2 structural safety documents now required by Florida law. 2, the current budget showing exactly how fully funded those reserves actually are. 3, ask directly, is a special assessment being planned or being discussed? Because sellers are not always required to volunteer that information. If the seller's agent or HOA can't produce all these, walk away. Don't get caught with a 6-figure surprise bill. Follow me and I'll walk you through exactly what to check before buying a condo in Tampa Bay.
Humana announced that they are going to terminate 600,000 Medicare Advantage members. You won't get the letter until the month of September, so be looking for your annual notice of change letter if you have a Medicare Advantage PPO or HMO with Humana. Is this bad? Well, it's a pain in the butt to have to change your plan every year, but the company is doing it because those plans aren't profitable. Why aren't they profitable? Well, sometimes it's because they can't get a advantageous contract with those hospitals and those doctors. So if they're not making money, they're going to leave those areas. They're still a very big company. They're still a very good, solid company. They're the 2nd largest Medicare Advantage company. They might overtake United. And they can only do that by running profitable plans. So it's not because you are sick. Your plan is not getting terminated because you had too many claims this year. It's because everybody on that plan has to get a new plan because it wasn't profitable.
All right, so you've probably seen little pieces of this floating around, but I want to actually break down what's happening in Florida right now, because guys, it is bad. It's not one bad news cycle. It's 3 different crises stacked on top of each other, and they're all hitting at the exact same time. You've got the insurance problem, you've got the HOA and condo fee explosion, and you've got people flat out packing up and leaving. And I'm going to walk you through all 3 because they're connected, and once you see how they connect, the whole picture makes a lot more sense.
The Trump administration has verbally rejected Arkansas's request to renew Our Home, which is the state's Medicaid expansion program. More than 200,000 Arkansans get insurance through this program. DHS says that there's no immediate changes right now and people enrolled in the program don't need to take any action, but that current waiver expires at the end of the year, and the governor's office says it's working with the federal government on a temporary expansion. Advocates for the program say losing Medicaid expansion could hurt patients, hospitals, and rural communities. The governor's office is telling us that they're now working to develop a more sustainable model, while DHS says future changes are expected to focus on how care is delivered, not who qualifies for coverage.
You love a condo, but then the HOA announces a $30,000 special assessment per unit for repairs. What do? Special assessments are huge red flags if you don't plan ahead. They're basically one-time charges to cover major building costs like new roofs, plumbing, or seismic retrofits. As a buyer, you need to know how this affects your monthly payment, your resale value, and your financing. Always review the HOA documents and budgets before you close. Otherwise, that affordable condo can turn into a money pit. I'm curious, have you ever been hit with an unexpected HOA fee or special assessment, and how did you handle it? Share with me in the comments below. Follow me for more tips and insight on the local market.
Now here's the part where I know some of you are going to say, wait, didn't I just see a headline saying Florida insurance rates are actually going down this year? And you're right, that's real. Citizens is cutting rates for a lot of customers. Some private carriers are cutting rates too, and new insurers are coming back into the state. That part's genuinely good news. But here's the thing about that. Going down from where? Florida homeowners are still paying somewhere around $8,000 a year on average for insurance. That is still one of the highest numbers in the entire country, by a wide margin. A small rate cut on top of the most expensive insurance market in America doesn't exactly feel like relief when you're the one writing the check.
$67,000 assessment due in 90 days. That's the letter a Florida homeowner got from her HOA. She bought the condo 4 years ago. The dues were manageable and the financials looked fine. What she didn't know, what wasn't in the disclosure, was that the reserve fund was critically underfunded. When state law required a reserve change after the Surfside incident, the math came due, all at once. What's staggering is that 74% of HOAs in the United States are underfunded. In Florida alone, special assessments are running from $10,000 to $100,000 per unit. An underfunded reserve isn't a hidden fee, it's a deferred liability. It doesn't disappear, it eventually becomes your bill. In property valuation, that liability is real. It just doesn't show up on any balance sheet until the letter arrives. Here's the lesson. Before you buy a condo or townhome, ask for a reserve study. Ask what percentage of the required reserve is actually funded, because the assessment may already exist. You just haven't been asked to pay for it yet. I'm Forensic Chad. Follow me for real cases and practical financial lessons.
This is what $115,000 gets you in Tampa, Florida.
So let's talk about the HOA side of this, because I think this is the part people underestimate. After the Surfside condo collapse a few years back, Florida passed laws requiring buildings to actually inspect themselves properly and fully fund their repair reserves instead of kicking the can down the road. On paper, that's a safety fix, and it's a good one. Nobody wants another Surfside, but the way it's playing out for regular people is brutal. Some buildings have seen their master insurance policy jump by hundreds of % in just a few years. One community reportedly went from around $50,000 a year to over $500,000. When that hits, it doesn't stay with the building. It gets passed straight down to every single owner, sometimes as a special assessment that can run into 6 figures per unit. I'm not here to make any bold claims about every single building in the state. Some associations are managing this fine. But the pattern showing up over and over, especially in older buildings, is fees doubling, tripling, and owners getting blindsided with bills they were never told to plan for.
Tired of looking at all these old condos that you see on Zillow? If so, this condo may be the one for you for only $280,000. So if you're anything like me, the first thing you want to know is location. This one is located in Orlando, Florida, 10 minutes away from Universal Studios and minutes away from key shopping centers such as Target, Walmart, premium outlets, and also the Millennium Mall. So if location is important for you as a primary residence because you want to be close to everything, no traffic, this might be for you. And if this is for investment purposes, being 10 minutes away from Universal Studios, enough said for investment purposes. Now, the other thing I really want you guys to focus on is that this condo has no carpet whatsoever, fully upgraded kitchen as you can see here, and turnkey, and located in a gated community with resort style amenities. If you guys want to know more information about this condo, be sure to click the link in my bio.
I have a newfound goal this year to influence as many people as I can to move to Florida. And I'll do so by highlighting first that we have no state taxes. We have beautiful sunsets, beautiful sunshine, no winter. Did I mention that we have no state taxes and that it's affordable and that I live on the beach and I pay $1,200 a month? We have Miami, Fort Lauderdale, Hollywood, Ocala, St. Petersburg, Tampa, Boca Raton. We have every sport. We have football, baseball, hockey, women, everything, college, everything in multiple cities. I walked here and it took me 4 minutes. Take that risk, make that move.
And this is where it stops being an abstract housing story and starts being about actual people. A lot of the owners getting hit hardest are retirees living on a fixed income. They bought these places to retire in peace, and now they're getting an assessment letter for $80,000 or $100,000 that they simply do not have. So they're selling, often at a loss, and leaving the state entirely. Shout out to the creator of that clip, by the way, because that kind of footage is exactly why this story is spreading the way it is. Links in the description. Go check out the rest of what they've posted, because there's more where that came from.
ICE raids are going to move from Palm Beach to Fort Lauderdale here in Florida starting Tuesday, July 14th. Sheriff's Office and state troopers will continue to be deputized and arrest and hold people for ICE. However, the raids that we are seeing at places like Walmart's, Home Depot, plazas, the highways, they will move from Palm Beach to Broward County area.
Live in Florida, you've probably heard about Progressive giving $1 billion in money back to their policyholders with auto insurance. You may think that's them being generous, but there's a dark truth behind this refund. The truth is that the law ensures that insurance companies don't make too much money. And due to the tort reform changes that happened in the state of Florida, Progressive made so much money it was actually illegal. That's why they had to give money back to their policyholders. So while you may think it's an insurance company being generous, it's because they made so much money after the laws were changed here in Florida, making it more difficult to get into a courtroom with a car crash case.
Now, is Florida actually emptying out? No, and I want to be straight with you about that. Florida is still pulling in a lot of new residents overall, especially from out of state and internationally. It's not some ghost town situation, but there is a real documented shift happening underneath that. Some counties, particularly in areas like Pinellas, have actually posted population losses. Middle-class families and retirees who came in during the pandemic boom are increasingly the ones packing up, because the math that used to work for them just doesn't anymore.
I've reviewed the bill that was introduced in the House, House Bill 837. So if you're curious, one of the main things in this bill is an attempt to change Florida from what's called a pure comparative fault state to a modified comparative fault state. And I'm going to explain what all that means. Under the pure comparative fault scenario, which is what we have now, a plaintiff is entitled to seek compensation for damages so long as their share of the fault is less than 100%. The way that works is in a jury trial, the jury on the verdict form assigns the plaintiff a percentage of fault. So for instance, if a plaintiff was in a car accident, but the plaintiff was speeding at the time, then the jury might say that the plaintiff was 20% at fault for the accident because the plaintiff was speeding. And so then you take the total amount of damages that the jury awards and you reduce that by 20% because that's what the jury found that the plaintiff's fault was. Under a modified comparative fault system, the plaintiff is allowed to pursue compensation for injuries or death so long as the plaintiff's own fault is not more than 50%. So under this new modified comparative fault system, any plaintiff that is found to be greater than 50% at fault for his or her own harm would be completely barred from recovery. What do I think about this bill? I don't like it. I think it absolutely takes rights away from Florida people to hold others accountable for any harm that was caused to them. I think there is nothing more fair in our justice system than everyone being accountable for his or her own portion of fault.
The one we got summer after high school when we first met.
So what's the official response been? Florida lawmakers made it harder for homeowners to sue their insurance companies, which was meant to cut down on fraud and excessive litigation that was driving costs up for everyone. And to be fair, some of the recent rate stabilization is being credited to that. Full context matters here. The legal changes were sold as a fix for a genuinely broken litigation environment, and there's evidence it's helping premiums level off. Doesn't make it painless for the homeowner, who's still footing an $8,000 bill every year, but those details matter if you actually want to understand why this is happening instead of just being angry about it.
Stop searching for Florida homes on Zillow. You're missing the biggest real estate hack of 2026. Most people think 55 plus communities are just for retirement. But if you look at the math right now, it's actually a genius financial move. First, the pricing gap. In today's market, you're often getting 20% more square footage for your dollar compared to traditional neighborhoods. Developers are aggressively incentivizing these communities right now. 2, the insurance phase. These are brand new builds. In 2026, having a brand new roof and impact windows means your insurance premiums can be half of what that charming 1980s house down the street costs. And let's be real, it's not nursing home vibes. We're talking pickleball, high-end fitness tech, and resort pools that stay packed on a Tuesday afternoon. If you're anywhere near 55, you need to be looking at these before the winter inventory dries up. I just mapped out the top 5 communities in Florida with the lowest HOA fees. Comment the word map below and I'll send that list straight to your inbox.
So here's the practical piece. If you're anywhere near this situation, if you're trying to sell in Florida right now, get an insurance quote before you list, not after you're under contract, because deals are falling apart at the finish line when buyers can't get coverage. And if you're a condo owner, actually read your association's reserve study and inspection reports before you assume your fees are staying flat. This stuff is knowable in advance. Most of the people getting blindsided didn't have to be. All right, so that's the real shape of what's going on in Florida right now. It's not one villain and it's not one headline. It's an insurance market recovering slower than the bills already sent out, safety laws colliding with decades of deferred maintenance, and a slow, real reshuffling of who can afford to stay. Let me know what you think in the comments section below. Shout out to the creator. All links are in the description. And if this is the kind of thing you want to stay ahead of, that's exactly what we cover here at Economy Undertow. So subscribe, and I'll see you in the next video.